Our next guest needs no introduction. He's David Blanchflower, former official at the Bank of England, now a professor at Dartmouth College. Today he joins me from Fort Myers, Florida. And David, I hope it's heated up down there since the last time we spoke. I know you were freezing.
Yeah, yes, it's better now, thank you.
Good.
But I've still got to pick you up on the comment you made a minute ago. He's not just an academic or an economist. Well, being from that, it's okay. I'll let you off. But
well, we were talking about Bob Diamond. Very rare to hear plain, clear, distinctive thoughts from a CEO. Usually they try to hedge. I know you will always quite distinct in your viewpoint, which is why I'm going to actually pick up right here with what Bob Diamond said. I mean, he didn't rule out that there would be countries leaving the Eurozone. He said one or two Eurozone will continue Euro will continue to exist. Through 2011, will the Eurozone exist as it currently stands?
Well, it clearly won't, because Estonia is going to eventually join. But I think
come on, you know what I meant. I didn't mean new ones.
I know what you mean.
People
the fractures are looking very serious. Certainly, Ireland, we're seeing the bond rating in Ireland falling, continuing stresses around the euro area. I mean, the question is, what's Germany going to do? Germany benefits from all of this, benefits from a low currency. Are they going to try and help the others? If they're not, then we're going to see a fracture. So it really does depend. But certainly if you're sitting in Ireland and Spain and Portugal and Greece, you think, well, why am I stuck with this monetary union? What's in it for me? And the great benefit for a country like the UK is you have your own currency, you have your own central bank, and you can do something about it. So as we sit at the moment, it doesn't look that this is, unless something changes, that this can continue. And I agree with Diamond. The euro will exist. The question is whether one or more countries leave or are pushed out. So I think it really depends. It depends so much on what the Germans are going to do. But
what would be the benefit to an Ireland to leave? I mean, it takes years to try to reestablish a currency, a new one of your own, and certainly the stability of the banks, the central bank has helped give them a bailout. What would be the benefit of leaving?
Well, to some extent, they've helped give them a bailout. Clearly, the thing with Ireland, I wrote a Bloomberg column about this the other day, Ireland's benefited hugely from being in the euro area. We've seen its position, I mean, the GDP per capita has risen hugely. Yeah. But the question going forward is, if you can't borrow, if austerity is terrible and really you see no way forward, then the benefit of having a currency that's depreciated could be helpful. So that's an attraction to some, and you see the opposition saying, well, we should renegotiate these loans. Yeah. We've taken loans at 5.9%, which we probably can't pay back. So at some point you say enough's enough. So there is political pressure to sort of renege on these deals.
Hold that thought. We're back now with former member of the Bank of England, David Blanchflower, always outspoken as an academic and an economist. David, we left the last bit talking about austerity. Literally, Merriam-Webster's dictionary declared austerity to be the year. God, I can't speak English right now. The word of the year in 2010.
Yeah, the word of the year, right.
What defines us in 2011?
Well, we're going to see more of this austerity really starting to take hold. In a country like the UK, what happened was there's been great talk of austerity, and a new government came in, and the effect of that was actually to cause business confidence and consumer confidence to collapse. Now what we're really going to see is the actual implementation of that austerity. It's going to bite and start to bite hard. The UK is a good example. On January the 1st, the national indirect tax, the VAT, is going to go up by 2.5%. So we're really going to see what happens. This is a great experiment around the world. Austerity in Ireland and Greece and so on is hitting. And I was thinking as I was coming in this morning, so Spain is obviously trying to cut back. We're now in a situation there where 42% of young people are unemployed, and then they're going to start to implement austerity. So at some point you start to see something giving. We've seen that in the UK already, young people out on the street. So I think 2011 is the year where we really see the effects of this austerity. It starts to bite. And the question is, do governments have the courage to keep going? And what can they do if it really impacts growth, as it surely will? Yeah.
Well, do you think that the UK can continue to remain somewhat on the sidelines in terms of providing some financial help to other countries in the European area with financial difficulty? I mean, they dipped their toe in the water with Ireland there and said, we will give you some financial aid.
Well, I think they're trying to sit on the outside, but no man is an island, and even though Britain is one, they depend on everybody else. And they actually, the Chancellor said, "Oh, this is a great deal for us. We borrow money at whatever is 3.2%, and we can lend it at 5.9. This is a great deal." And you say, well, maybe that's a bit too expensive for them. I don't think the UK can sit on the outside. It's tried to say we'll go down this austerity road,
right,
but the data over the last week start to look worrying. Unemployment up, GDP revised down, numbers out today, the service sector slowing, all of that before the austerity hits. So the UK is dependent on everybody else, certainly has its own central bank, but the worry is everyone wants net trade to rise, and again in the data this week, net trade again is not contributing to growth. So it's hard for an individual country to say, we're separate from everybody else, we can go our own way, especially if growth is compromised. So I think that the old G20, where everybody said we're in this together, was the right way, and now you see the fracturing, and then you get the consequences.
Well, then does QE define us in 2011? I mean, does the UK have to take a page from Ben Bernanke's book and provide some stimulus on that level if at the fiscal level they are having to take state belt tightening?
Well, I think they're going to have to see a number of things. If you start to see growth being really compromised, then people are going to say, oh, well, we should cut more. Well, that will compromise growth further. I think what you'll start to see will be a need to sort of go back on the fiscal policy. I mean, the cabinet secretary, Sir Gus O'Donnell, has been reported to say, where's your plan B? And if you haven't got a fiscal plan B, it's going to have to be a QE2 of some kind. But of course, then the worry is you start to see inflation. So it really looks like you have no strong levers, and that's why business confidence is falling.
David, I want to take you here to the U.S. right now, because we did get jobless claim numbers today. They were down. It looks like consumer sentiment's pretty much better. Sure, we got a housing number that was a bit wonky here, but what is it that you think we're entering the new year with? I mean, is this true momentum in the U.S. economy?
Well, I think it is, and I think that it's interesting to come to the US with a contrast to the UK. I think what we've seen over the last, perhaps surprisingly over the last 6 weeks, we've seen the Fed say, we understand this, we'll do more QE. And then you saw compromise on the Hill, and you see payroll tax cuts, you see renewal of the Bush tax cuts. I think that boosts business confidence. I think people suddenly realize that, growth hasn't been strong, but at least the authorities get it. And I take the example of the UK. It's quite clear that the authorities don't get it. And you see their business confidence and consumer confidence falling, and in the US, the opposite. So I'm quite confident that we've seen some return. The big question is that growth fast enough to get the unemployment rate down? Yeah. Maybe we're going to have to do more, but it's a great start in the last 6 weeks. I mean, I'm surprised that they've done so much, and good for them.
All right, an optimist. We found one. Thank you very much, David. You have a great holiday. See you in the new year.
You too.